all you people that always come looking for capital for your projects, you're going to want to listen to this conversation. So thank you for coming to see us today.
Thank you for having me.
Maybe what we start with is a little introduction so everybody can understand what you guys are doing.
Yeah.
And that'd be fantastic.
Okay, so we are one of the largest VC from Japan, and we invested Web3 VC. We invested about like 4 years ago into like Web3. We also have a Web2 fund called Highline Capital. We pretty much received the mandate from the Japan government for the investment in a lot of LP corporates, LP from Japan. And through the past like 4 years, we've been investing into almost like 200 projects into like Web3 projects. And every year we run the largest startup community conference in Japan, covering both Web2 and also Web3. Every year in Kyoto, called IBS conference. If some of you been to like or exploring like Japan markets, you probably heard about the conference. Every year their traffic is about like 10,000 to 13,000 people.
Oh, wow.
Yeah. It's yeah, you can ask them. It's
Yep.
like yeah, you've been to all the IBS in the past. So yeah, we have community about like 10,000 to 13,000 people covering both like Web2 and also Web3. And we are one of the early investor into Aether. Also the one of the first like investor into the first Japanese regulated stablecoin, JPYC. Yeah. And recently we also did like 2 DAT deal, which is Naka and also BNC.
All right, so lots of transactions, and I mean, you guys have been involved in many deals.
Yeah.
What's the process that companies go through when you guys are evaluating them to to invest into their transaction?
Yeah, I think first it's the if like the business model is actually there's a product market fit, definitely, like because of even for Web3 it's talking about like narratives like fitting for hopefully creating communities, like hopefully after your token is listed that bringing like some of the trading volume, but the underlying like for the token or the project still need to sustain like throughout a few cycles. So we feel like the cash flow is definitely one of the key for a project to sustain. So like firstly, like we will be looking to the business model, whether there's a product market fit that brings in like the revenue that will be sustainable enough for the project to lasting like a few cycles. Like once it's listed, like we need to ensure that as an investor, we are still being locked up for like probably like another 2 years. So we needed to making sure that the cash flow is actually will actually help the project to actually live the next like 2 to 3 years before we are actually completely like exiting the projects. So like the product market fits, whether the project is actually generating enough like cash flow, it's usually a key things when we evaluate like a project.
So now we make this transition into DATs that are happening, right? And so our conversation today is focused around the digital asset treasuries. I like to say that it's the digital asset treasury is like the Trojan horse that the Web3 people are putting in place for the traditional finance to get them involved in crypto. And then we're ultimately going to figure out how to take over that part of the business. Whereas right now, traditional finance thinks they're taking over crypto. I don't think that's going to happen. So
Yeah. No, I think that this is a way offering for like the Web2 investor getting exposure to crypto, especially from the institution side. Because like not every single firm, like even though you probably still have like Fidelity, like BlackRock's, and sometimes still see that like they are exposed to like the Bitcoin or like Ethereum ETF, but they are still like because since some of them actually publicly listed company, so they are still under certain kind of like restrictions, like regulatory like framework or even within their board or like internal compliance to get exposure to crypto. So definitely like a DAT, it's a way for these like institutions or even for retails that probably have a hard time like KYC, like through a certain exchange, probably you like a certain tokens, but probably some of these tokens are just exposed to a certain exchange that these like retail investors have a hard time KYC into. So for them, like opening up like a stock market or like a stock trading account is probably some kind of a tool set that they're actually more familiar with instead of like trading directly with crypto. And while in some of the regions, such as like Japan markets, I think one of the reasons why Meta Planet is quite successful is because Japan's like crypto capital gain tax is 55% versus like the stock capital gain tax is only like 22%.
Yeah, for Japan,
Yeah.
perfect.
Yeah. So like Japan market is kind of making sense like to probably construct some kind of DAT because the capital gain tax from crypto is just naturally way higher than like trading stocks. So this is why that people will be like buying to like Meta Planet or some of the like the DAT in Japan market because in a way that you still have exposure to those tokens, but you pay less tax on the capital gain.
And you guys have been focused on, like, have you seen the difference between the DATs in Japan versus the DATs in America?
Oh yeah, definitely. Yeah, because Japan tend to be a very conservative market, so they pretty much only trade on like big caps, like those like top tokens. That they been like familiar for quite some time because Japan is a market that like usually project when they enter, it takes really long time to build that kind of trust. So usually for them, or any of the project entering into Japan, they will probably still like working on like with the local partnerships and also getting some endorsement and some like validation with the local either like banks or like some of the local partners that the traditional like Japanese investors are familiar with because crypto market even in Japan is super regulated. Like all the exchanges need to get licensing from the FSA, which is like a US SEC, and all the token listed on the exchange need further approval from the like the Japan FSA. So in a way that it is the most protecting like investor market, but at the same time, it is very conservative at the same time. So during the FTX incident, Japan is probably the least further market in the world because they will put the asset in the cold wallet. So the exchange wouldn't be touching on the assets that like the retails or the general like customers from these exchanges, their asset is actually being well protected. Yeah.
And okay, so in Japan,
Yeah.
in the US, we've seen this catalyst of DATs happen. So in Japan, do you think that follows, or is it just going to be the big tokens that are getting the attention because of that nature of the conservative environment?
I think first it's probably the big tokens because a lot of projects are trying to get into Japan market because Japan, it is the Nikkei market like behind like Nasdaq and it is still one of the major like financial hub in the world. So Nikkei market it is still with a high volume trade like trading volumes and even Japanese yen itself is in terms of the forex market it's one of the highest like probably yeah for the forex market is one of the like the biggest ones. So it is like in a way that it is a market once you breaking it has a huge potential, but for that breakthrough it just takes sometimes to build that trust and complying to the regulations in that market because after all this is still a market with 100 million people.
And are you seeing an abundance of new offerings happening in Japan?
I think there are actually well I think the upcoming like in the pipeline there actually quite a few folks trying to do Ethereum like DAT and also Solana DAT in Japan. But as I said, like this is still a market that's still like it takes some time to build that kind of trust. So either you work with like local partners in probably local corporates that have like a long standing trust from like the Japan markets that probably help you to validate so that the general public will actually think that oh this is a real deal instead of like a token that they're not familiar with.
What do you think that when you guys are looking to invest into into the DATs.
Yeah.
Are you looking at this as a roadmap for your early investments into some of your tokens that you already have? Or is it something that you're viewing as a completely separate element?
I think that it really depends on like the linkage and also if this DAT would actually still having revenue generation ability because I think at the end of the day you started seeing some of the DAT people in the Web2, they are probably more used to the traditional valuation about valuing the stocks with like PE, PB, like EV over EBITDA or like NAVs, all these valuation other traditional like stock traders for more familiar with. So like through all the like the hype of like the DAT that people only look into the NAV, I think when the markets start calming down and also start to use the more traditional valuation to value, especially if you need the Wall Street, like because I used to work for investment banks for many years. So the investment banks, like for the sell side, when they put out the reports, they will still use the traditional like Wall Street style to actually put out the valuations and putting out the reports. So in a way that you need to be convincing these like Wall Street people to actually helping you to come up with the report. That means like you probably still need to have some kind of like the real business inside. So I think that the reason that why we did like Naka and also BNC and also consider about doing the Aether, it's because all these actually like the DAT we're thinking about doing, it's like they still have the real business behind, such as like the NACA, they run the BTC conference every year. And I think this year their net earning is about like 25 million. So they will be consolidating the real business into this like stock companies that will be providing a more like a traditional way of methodology of valuations for these like Wall Street to really come in because all the DAT or Web3 tokens, they try to get the Wall Street money, but then the Wall Street money use a different kind of like valuation than the token way, like a Web3 way of like valuating the tokens. So I think that in order for the Wall Street names or like Web2 investor to get familiar or like getting the trust into like investing into these like the DAT companies, you still need to make in a way that they feel like comfortable of investing using the valuation that they were used to be evaluating a stock.
So do you think that the reason that some, it's a mixed bag, right? Some work really well
Yeah.
and they just keep increasing the NAV based on the amount that they're raising off of the S3s that they're filing and whatever secondary offerings they're doing, and it keeps trading above the NAV. Others have gone down below the NAV, but what a lot of people don't think about is maybe the initial investment in that DAT was at a point 0.7 something. So from the initial investors that invested in the DAT, that is actually not negative. It's trading negative to 1, but it's positive to the people that put the money in initially, potentially. So what do you think is the difference between the, I mean, aside from this element, right, that it has to be valued and there has to be some kind of real business? Like everybody came out and there's like 50 Solana DATs now, right? Like what's the difference between one versus another? There's just this really bad public company that wasn't going to survive no matter what. So they throw a bunch of Solana in it. No matter what the yield is off the Solana, it's going to be better than losing $10 million a year and doing another secondary financing to get out of the convertible debt deal they did before. So what is it that helps get the attention to the DAT so it starts trading? Like, what do you guys look for in making your decision about these things besides just the regular fundamentals of the business? Because fundamentals are important, but it also has to be something that has an appeal to an audience that is going to get their attention anyway, right? Do you guys look at that piece of it?
I think, of course, like if we don't look at the fundamental, like the core business of the original business, it's like, how does the management company differentiate itself than the rest of like, such as if there are 50 like Solana DAT, how does one differentiate than the others? Like one is like they probably compare on the fundamental. If not comparing on the fundamental, then everyone is comparing on the price that you enter into Solana. Or if that will be like what will be like the extra yields that it could be like from this like Solana DAT, like the extra yield, like you could be doing like either on chain stakings or you doing like yield stakings. What could be the potential yield? Because like if they're actually 49 like Solana DAT all pushing toward the markets, how are you going to get the attention from, it's not just about to us, but in the general public who actually have eligibility to trade stocks? How are you making yourself like stand out? It is the same as like you have like 10 like traditional yeah, financial companies such as you have like Goldman Sachs, you have like Citibanks, you have JP Morgans. Like, how does one depend like decide to invest over one over the other? It is depending, of course, on the financial reports. That is a methodology that like people when evaluating a stock, or like you evaluate on the book value, which is yeah, because I think that if you need those like traditional people to buy stocks or like traditional institution people, they are not going to use the Web3 way when evaluating buying a stock. They are going to use the way that they were familiar with, which is the old way, like what's putting out on the Bloomberg terminals, or like that's a report that's issued by Goldman Sachs or like Morgan Stanley's, the valuation methods that's been putting out in Wall Street like for years to evaluate whether a stock is worthy to buy. So for us, it's about like if you're constructing the DAT, either you could be like still using the funds to probably do some of the M&A into like some of the affiliated like companies that yields the earnings and also revenues to boost up either your like NAV or like your book value, your earnings, or like a bit of like numbers. So in a way that those like Wall Street and also like the retails.
So uh very traditional kind of analysis
Yeah.
of the public company. You think that will so long as they can prove that they're doing a good job in executing on yield, so that the net income of the business will dictate the price, not the MNAV
Yeah.
of the transaction? Or do you think it's correlated as well? Like the net asset value of the business will hit some kind of level, but then the yield part of it and getting some kind of return there is going to equate for the difference between the losers and the winners.
Yeah.
Is that what you're saying?
I think when DAT are set with the NAV valuation is because like the first few DAT were actually Bitcoins. And Bitcoins, of course, there is no extra yields or earning that could be coming out from Bitcoin. So it's pricing as a way that it's a digital gold. So they use it, the book value, to evaluate on the company. But as you move on to other like DAT, whether it's like Ethereum, Solana, or any other token, which comes as a utility tokens that it's not seen as a Bitcoin. So I think that if you are selling the DAT or the stocks that you are planning to sell it to those like the normal people that we are seeing every day, I think that of course they are every day in the past like in their lifetime, they evaluate stocks with the old methodology. They won't be like changing their overnight like methodology for investing just like the crypto affiliated projects within a new methodology for like the valuation. So I think that when you're selling like the token projects to traditional market, I think that it's a way that to use their method when they're actually evaluating a stock, because they are going to buy a stocks. It's like for long term, and usually for the retails, they are not really like crypto people, actually overnight traders. They probably tend to be holding the stocks a little bit longer, especially the asset management house in Wall Street. Yeah, they probably the shortest period they will be holding is like half a year up to a year. So during this period, they probably when only evaluating on the NAV side, like because it's 100% like correlation to the token price, that the token usually sees much higher volatility than the stocks or when the company that really comes with a real business. So I think that the Wall Street will be more cautious when entering into the DAT deals because of the volatility of the tokens itself.
Do you think there's a certain size of a token that the 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 project needs to be in order to enter the DAT market? Or do you think that this could, similar to the way that you have stocks that are on these exchanges that fit the profile that you're talking about, that are being based on their fundamental analysis. But there's also, companies with billion-dollar market caps that have no fundamental, that have literally only the prospect of being profitable someday, are still trading at $1 billion market cap. So do you think there's a level of company that kind of breaks that barrier, right? Like you could take a more early stage crypto that has potential, that with the right story, like look at with the OG transaction, like from 2 days ago, right? Goes public, the stock goes to uh $90 pre-market from $25. God knows how much they sold off the ATM when it went to $95. Probably a lot, I hope, for them. They sold a lot, but then it crashes right back down. But what people don't recognize is that now they have a lot more cash in the bank that they sold at $95 than they did when they did the deal at $25. But the attention that the project got from doing that also drove the token, to do really well. So they utilize the public market to leverage the story. The token does well. The DAT does marginally okay. I guess we'll find out once we understand how much they raised off of the ATM at $95, right? So is there is have you, when you guys are looking at your projects to go into these things, is there a value that you put on the marketing side of this for a project, or do you think it just always is going to come back to the fundamental piece, like the fundamental transaction?
Yeah, I think it depends on if we're doing the token side or the DAT. If it's like doing the DAT side, then I think a certain kind of like fundamentals still need to be there because this is at the same time we are seeing in Naka as well. Like uh token actually went from like $1 all the way to $30, and now it's dropping back all the way to like $1.4, and it is the second largest like DAT for like Bitcoins. So I think that even
Well, why do you think that is? What's the issue with that particular one?
yeah.
Like, why do other ones haven't done that? What do you think the issue is, that is the difference between that one and the other ones?
You mean Naka versus like the rest projects? I think the problem with Naka, it's also like because it raised like $800 million. It's probably one of the largest like size that's being raised. Versus its market share, it's only like I think a few hundred millions. So like the markets that the actually the total amount that they raise is actually bigger than their market cap already. So when there's the unlock happen, when there's a selling pressure. And also I think Trump Media Group also like came in with $300 million. So when the unlock happened immediately with that selling pressure coming in, that it will just be hard for the share price to hold up. Yeah.
So just too much supply.
Yeah, there's too much like supply selling pressure in the market.
But fundamentally, that business, under your fundamental analysis, has, if it's trading that far below the net asset value, is actually a good buy at that level.
I think now it's a good buy if anyone is looking for like a good target. I think it's when actually any funds or we could be also thinking about it. It's probably doing another secondary like OTC after the initial like probably the the DAT is being constructed, it's probably wait until the secondary markets or like the second like OTC being offered when actually the market calm down a little bit and when the selling pressure like it's actually been eased because stock market is also highly correlated to the token market, and the token market these days you could already see is actually not that stable at this point. Yeah.
Interesting. So, how many of your early stage investments, because you guys have a lot, you guys have lots of companies. If you go to your website, you guys are invested in every single amazing deal out there. How many of those companies are talking about this strategy? Is it, 10% of them? Is it 80% of them?
You mean for a DAT?
Yeah.
I think they were a bunch, but probably still like I would say like that less than the 10%.
30%?
Yeah, probably still. Yeah, I wouldn't like come up with a number, but just like a dozen of them are talking about it.
And as a VC in these projects, if you guys are you're taking calculated risks all the time in investing into these early stage projects. So it's not like you're prone to risk. You're you're investing, you're doing your best analysis, but you know that some of these are not going to work, right? Do you take Can you take that same approach with the DATs and say, okay, some of these are going to work and some of them aren't going to work, but the ones that do work will be will outpace so much the ones that don't, like that you continue to do it. Like, can you take that venture capital approach to the DAT market?
Yeah. Yeah, we try to. Yeah. Yeah, but at the end of the day, we still need to, yeah, because we are managing other people's like money, and partially our Web2 fund is managing the government's money. So we will be like a little bit cautious about like when evaluating. We try to make it, of course, that we will take that risk, but at the same time, we will be making like wanted to avoid as much risks as if we can. Yeah, so we will be taking all kind of dynameters of risk into considerations when we invest.
And when you're making the decision to invest in these things early stage, like what percentage of the ones that you invest in early stage are making it to making it?
Yeah.
But I guess the ones that would go into the DAT, they've already kind of made it, right? So if they've gotten to a point where they can do a DAT, they've made it somewhere. So your initial risk capital is already taken care of, right? So I guess at that point it becomes, is it better to just is it better to go down the DAT route and double down on your risk, or do you just uh, keep going with the risk that you already have because that's gotten you to the level where they could do the DAT?
Yeah. I think that since we manage the corporate and also the government money, like we will be comparing to a lot of VC, we are kind of like risk averse. Yeah, given the nature of our LP, that we are still like considered to be the more, but our ticket size can be big. Yeah, or we could be bullying, like asking our LP, including like SBI investments, to co-invest. But the thing that's like, we needed to making sure that the trust is always there, maintaining with our Japanese LP because Japan market trust is everything. Yeah.
What do you think happens next on DATs? Where do we go in the next, short period of time, and then over the maybe the next year?
Uh, I think this year's, of course, like for the Wall Street that haven't had the exposure to like the token yet, or they have a hard time opening like a token, like a crypto accounts. They could still like invest through the DAD. I think this is a great vehicle for the like the Web2 investors who have a problem like opening accounts in the crypto worlds. Yeah, due to a lot of like compliance, regulatory issues, especially for a lot of like banks and financial institutions. So I think that this is a great vehicle for them to getting exposure to the the crypto and the token. But as for the existing like Web3 investors, it is just because we also have already exposure to tokens. So when we are actually evaluating on the DAT projects, we can help like probably convincing some of the Web2 investors who are interested to publicly participate it in the token book who cannot into like the DAT. So it should be like a win-win from both of our ends. It's like from our Web2 partners and also like us like being the Web3 itself. No.
Glenn, thank you very much. I appreciate you sharing with us. I know that there's a bunch of people that are always trying to hit you up to get your attention, to try to raise money from your company. And so I appreciate you taking the time to come here and be here with us today and share your insight onto DATs. We're excited about them. We think it's a unique vehicle that'll stay for a while, and provide some liquidity for uh, you know, our partners, some of your investments. So thank you very much. I appreciate
Very
it.
much for having me.
Thank you.
Thank you.